Hello guys, and welcome back to another insightful video on my YouTube channel. So in today's video, I'm going to show you how to identify high probability intraday setups, right? And what makes this video different from any other video that you're ever going to find on YouTube is that I am going to be showing you this with 4 scenarios. And these 4 scenarios, 2 are based on smart money traps, and the other 2 are just normal intraday setups, right? So quickly, before we move on to the charts, if you are not subscribed to the channel, kindly hit that subscribe button and turn on post notifications so that you don't miss out on other future important videos, right? So let us jump onto the charts and see what we have for today. So in order to take a trade, whether it is intraday or swing, you need to check the direction of the higher time frame, right? So even without going on to the weekly time frame, this is the weekly swing leg. Okay, so the weekly is bearish, and within that weekly swing leg, we can see the daily making lower highs and lower lows, right? And the trade that we are going to talk about was within somewhere here. Okay, great. So basically, this was the swing leg which I was working within, right? And so what I'm going to do on a normal day is that when I see the daily make a push to the downside like this, I am going to wait for price to come into certain levels of the daily leg. Then I can look for, in this case, a sell, right? But in order to expect that daily retracement, we need to have the 4-hour telling us that. Okay, and so quickly let me step into the 4-hour and let's see if the 4-hour gives us any intention to retrace, right? The daily leg that we were looking at was from here to here, okay? And within this leg, we had price making lower highs and lower lows, right? Lower highs, lower lows, and lower highs and lower lows, right? And this was basically the last H4 point of supply, okay? And so to see the daily start a retracement or to begin a retracement, we will need to have this last point of supply breached. But we can see that that point of supply was respected. And so this was telling me that price was going to continue with the bears to the downside, right? It was going to continue with the higher time frame directions. So right now we have the weekly, the daily, and the H4 bearish, right? And even on the H1, we had price switching to a bearish one. So on the H1 time frame, you know, this was the last H1 point of supply, which got broken. Okay, so H1 was bullish earlier, and then we had this break of structure right here, which also continued with the H1 bullishness. So this was the last H1 point of demand, okay, to which made the high over here. But we can see that this low was taken out right here, and so right now we can confirm that weekly, daily, H4 and H1 are bearish, right? So all what we need to do is to wait for our 15-minute time frame or our 30-minute time frame, our intraday time frames, to align with what the bigger time frames are seeing. Then we can look for sales. Okay, so putting all these things together, we know that we are looking for sales. Okay, great. So we can see that we were having a level in here on the H1 where price respected, and if I come to the 15-minute time frame, you're going to see what price was doing on the 15-minute time frame. Okay, so within this leg of the H1, okay, price was actually ranging within these areas. Price was ranging, okay, and so any buy or sales that you had were going to be short-term opportunities until we see a clear break of structure of the 15-minute aligning with the higher time frames. Then we can look for sales to the downside. Okay, so initially we had the 15-minute making what lower highs and lower lows, right? Lower highs, lower lows, lower highs. Okay, and then we had a change of intent right here. Let me clean all these things. So we had our first change of intent on the 15-minute time frame right here. Okay, so change of intent to the upside, right? And we had a follow-through break of structure. So this was the new 15-minute bullish push that was made. Okay, but we can see that when price came into this level of the 15-minute, it didn't respect, right? It was supposed to create a high to the upside, right? But it didn't do that. And then we had that change of intent back again to the bearish one. Okay, so we've had another change of intent right here. Okay, and price didn't retrace deeper, so we move on to what price was doing. We always act according to what price is doing, okay, not what you think. Okay, so after that we had another push of the 15-minute, making another bearish push, a follow-through break of structure to the downside. Okay, so it made this level here the last supply of that 15-minute swing leg. But remember, I said we are ranging, and so we need to trade according to what price is doing. Okay, personally, I was looking at price to come up here, then I can look for the 15-minute to change intents, then I can take it to the downside. But we can see that we are ranging within this whole H1 leg, like I said earlier. Okay, so I remember that I even had some buys from here to the upside, okay, which gave me like 22R. I'm not going to talk about that because it is not part of today's topic. And so the 15 minutes changed from a bearish to a bullish one once again, and this was the last point of demand that we had on the 15 minutes, creating a high. Okay, so I remember also that personally I was looking for price to come into these levels of demand of the 15 minutes, then I can take buys to the upside. Okay, but price did not offer me any opportunity until the next day, when we had, I think there was a news release, right? There was a news release, and we had price breaking structure to the downside. Okay, and so this actually, if you remember, I was saying that this was the last 15-minute point of demand. Okay, and so we had this level of demand with broken. So right now we can see that the 15-minute is bearish. Okay, aligning with H1, H4 daily and the weekly. So now we can start looking for what? Sells. Okay, so in order to start looking for sales, we have two regions or two levels to mark our point of interest. The first one was up here, which was an origin point of interest or an origin supply zone. Okay, and we can see that price didn't get into that. And the second one was also right here, which was a decisional supply zone. Okay, so it means that we can start looking for sales within any of these two regions. Okay, so this is where the smart money traps come in, right? So I'm going to go into the 1 minute time frame and show you the fake out that price provided in order to induce people to sell, and then after that it took them out, or it smashed their stop losses, and then it moved in the direction that it wanted to move, right? On lower time frames, on the 1 minute, so before this week, and you will realize that in here, when price tapped into this decisional supply zone, we were having something nice. Price gave us a confirmation, right? So we had this highs being put out in here until we had that tapping, right? And we had a very nice confirmation. Okay, so you could have had your limit set in for sales with your stop loss just like, let's say 9 pips, right? We're on the 1 minute time frame, so let's say 9 pips, and you would have been looking forward to take it to the downside, right? But you realize that price just took you out. So what is the reason for price taking you out? And this is what I want to show you. So this is why you need to always open your eyes and look at the bigger picture. So if I come back to the 15-minute time frame, you're going to see something interesting. You're going to realize that, you know, even though this was a decisional supply zone, price had actually made a double top over here. Okay, so that was liquidity built up, right? Always open your eyes. That was liquidity built up to the upside, right? And so we can see that price will definitely need to take this out. I have said this in my video where I was talking about liquidity. I think it was my second or third video, something like that. Okay, price took out these equal highs, so this becomes your FU candle, right? Now let me go into the 1 minute time frame again after price taking the liquidity and see if we wouldn't get any entries. So after taking out those highs, let me take this one out here. After taking out those highs, right, where can we get an entry, right? We could have had our first entry right here, okay, which is valid. We could have had our second entry right here, which is also valid. Our third entry comes off from here, okay, and if you missed again, your fourth entry comes from here. So we can see that after taking out that liquidity built to the upside, price provided us with what? 4 opportunities to enter the market, right? And where would have been your target? If you are looking at just the 15-minute structure intraday wise, you are going to be looking at this 15-minute target liquidity, okay? And you know, after everything, price moved straight to the downside. You can see it didn't retrace to the upside again, okay? So that's the first trade based on the trap. Now the second trade. Now, so after everything, we've seen that price has put in a 15-minute low. Okay, so if I should come to that 15-minute structure, you realize that now we have had a confirmation that the 15-minute is bearish, right? So this is a target liquidity of the 15-minute leg, right? And so anything that price presents here for you to buy is a trap. You're not supposed to buy. If I take you to the 5-minute, you're going to see what I'm talking about. So on the 5-minute, believe me that people were considering this zone over here as a demand zone, but in reality, it was just a trap. And even after that, when price came in here, we can see that price was making what? Lower highs and lower lows, right? And we had this high taken out, right? And so, trust me, people will be looking at this over here to take buys to the upside, right? But in reality, it's a trap. You're not supposed to buy. You're not supposed to buy. Why? This is a target liquidity. Price must reach this 15-minute low. Apart from that, H4 is bearish, daily is bearish, 15 minutes itself is bearish. You're not supposed to trade against the trend. The only time you can trade against a trend is when you've had a low taking and you have an opportunity for a counter trend. And I'm going to show you that as well. Okay, so anybody who was looking forward to buy over here, you would have had your stop losses smashed. Okay, so where was the real entry then? So after this last push, you realize that price was showing some kind of like bullish intent within internal structure as well. So if I should step into the 1-minute time frame, you realize that even after price giving people the fake buys, it gave them another fake scaling opportunity. Okay, so if I should take this out, you realize that internally price was doing this: lower highs, lower lows, lower highs. Okay, this one failed, and so we had that break of structure, and price was providing this opportunity for people to still look for a scaling opportunity. Okay, so we had this right here. Okay, you can see how beautiful everything is aligning. Price is telling you everything, like take it, take it, take it, take it, take it. Okay, so price comes into this level. Okay, this supposed level to look for buys gives you that beautiful sign of bullishness, gives you that break. Okay, leaves an imbalance over here. Okay, and so you are convinced that you can take the buy. Okay, and you realize that when price came into this zone, it gave us a reaction to move up, but in reality it was fake. It was a trap. Okay, so after that, what happened? It just took you out. Okay, and this last level over here, which was making the bullish moves, internal bullish moves, was taken out. And that is where our trade comes in, because I understand that this is a trap. So back to the 5-minute, you are going to see something. So on the 5-minute, you are going to realize that this last low, okay, this last point of demand, which was providing a fake opportunity, was actually taken out by this particular candle. Okay, by this candle. So we have this first POI to watch after taking out this Asian low and the 15-minute low. We have this to watch. We have this to watch, because in here price decided to push to the upside. Okay, so we had this level also to watch, and this candle also to watch as your POI. I wouldn't look at this because it is the Asian high. Okay, so this was the candle that price reacted off. Okay, so I'm going to indicate that nicely. I'm going to mark that nicely, and you can see that price never breached, or it never went above that candle. So on the 1 minute, where would have your entry been? You can see that if you are that kind of trader who do not wait for confirmations, even with just your limit set, price would have tagged you into the trade. But if you're a trader like me who wait for confirmations, you would have had your beautiful confirmations right here, right? For the first entry right here, and a second entry after breaking structures right here. Okay, and where would have been your target? To the downside, like I said, to that, yeah, so to this level in here, which was the last point in the daily swing leg. Okay, so that's the second scenario. So it was the same scenario which I used to take this trade. Okay, so in here, the difference is that in here 15 minutes was bullish, right? And when it got in here, it was giving you opportunities to buy. But in reality, 5 minutes was not bullish. 5 minutes had not given you any intention to buy. So this was my last 5 minutes supply zone, right? And after it tapped into it, it gave me that confirmation. Then I took my sales to the downside for like 17, right? So it was the same scenario, just slightly different variation. So with my third scenario, my trade was somewhere in here. Okay, so when will you start looking for trades? Remember that this was the last daily point, right? The last daily target liquidity, and it has been taken out. Okay, so if 15 minutes or if 1 hour or 30 minutes is giving me any opportunity to take sales, it is eligible to take the sales, and that is exactly what happened, right? So if I should zoom this thing in, why did I take this setup? First of all, I know that my daily structural level has been broken, right? And 15 minutes again was in line with this daily structural level, right? So when I came in here, I realized that the daily has made, the 15 minutes had made a fresh break of structure right here. Okay, and so I had my supply zone right here indicated nicely. Okay, and all what I was doing was to wait for price to come into it, and price did just that. And I am aware that if I should take any sales from here, okay, my target will be to this low. Okay, this was a trade that I personally took. Okay, so going into the 1 minute time frame, let me show you my entry. Okay, you know, in my video where I was talking about how to trade smart money concept with 3 simple steps, a lot of people were bashing me. They thought maybe smart money is supposed to be something odious. I mean, it's not supposed to be so. Trading is supposed to be simple, right? But the truth is that simple does not mean easy. Okay, the fact that it is simple does not mean it is easy. No, you need to put in a lot of time to backtest, to read structure, to understand what the market is doing. Okay, so yeah, so when price came into my supply zone, how did I take my sales to the downside? Okay, so on the 1 minute time frame, this was basically my last low that made a high. Okay, this low did not put in a high, and so I wouldn't consider it as a true low. Okay, so all what I was waiting for was for price to take out this low and then retrace to any of these POIs where I'll have my limit set. Okay, so the first one was right here, and this was the second one, and I just went in for this one. Okay, the reason I won't tell you here, but my entry was right here and my stop loss was like 2.5 pips. Yeah, and price just stopped in now. If I get a screenshot, I'm going to post it on the left side of the screen. Okay, and where was my target? Remember, we are targeting the 15-minute target liquidity, which is the low. Okay, that was about 22 or what? Yeah, so it was like 23.5 hour, and I took full volume on this trade. Okay, so this is the third scenario. So anytime you see something like this, always make sure that your time frames are aligning. If your 4 hour and your 30 minutes, 15 minutes are aligning, you feel like your intraday time frames are aligning with your bigger time frames, look for trades where you're supposed to look for them, right? So this is the third scenario. Now the fourth scenario, if I come to the 4-hour time frame, okay, I told you already that the bigger time frame had made a push to the downside, right? Taking this low over here, okay? And so I was telling my people in my Telegram group, okay, that if 15 minute take, I think at that time 15 minutes had taken structure, had taken out a high. So this last 15 minutes low over here had broken at that point in time. I think it was a Monday or something. Yeah. And I was telling my Telegram group members that they could look for buys after that this high is taking. And personally, I was looking at this level in here. I was looking at two things, right? The first was this demand zone over here, and the second one that I was looking for was for price to take out this Asian low. Then I will look for entries after the Asian low has been taken to the upside, okay? But as you can see, the Asian low was not taken, okay? So I personally missed this trade right here. But what I want you to understand is that this trade was a counter trend to the 4-hour leg, okay? So if I should come in here on the 4-hour, you realize that we have a beautiful levels in here to watch. I was having a 1-hour POI over here, and this extreme 4-hour POI, which I shared with my Telegram group members, okay? I shared with them that they should be looking for buys to the upside, okay? So on the 15 minute, this is a counter trend trade. So on the 15 minute, you know, I know that price has taking out the last 15 minutes high, okay, the last 15 minutes lower high. And so I knew that I was in for a trade. And so I was looking for what? Price to either come into this 15-minute POI or to take out this Asian low. Then I can look for entries to the upside. But I missed, right? I missed this buy. But on a 5 minute, something happened. And that is what I want to show you, okay? On the 5 minute, even after price had missed that liquidity point or that liquidity grab, we can see that in here, this was basically the last 5 minute lower high that made the lower low over here, okay? And so this level of the 5 minutes was supposed to push to the downside, but it failed. And then when it failed, what did it do? It led to a break of structure of the 5 minute, okay? So we had the 5 minute breaking structure to the upside, and so this becomes like a supply to demand flip, right? So it means that there was some interactions in here, and so we can look for buys after this break of structure, okay? So without even going into the lower time frames, you can see that after price tapped into this interaction zone, this demand zone, or this supply tend to demand zone, price gave us a first move, probably no confirmation, but after this second one, you could have made that entry, okay, to the upside, okay? And remember, I said we were taking counter trend trades just because of the 4-hour, and you can see that even from the 5 minute, you are getting a cool stop loss for as little as 3 pips, right? And your target is going to be up there. Let me go to my H1 and show you that's hidden supply zone that I was looking at, because you are going to use that as target, right? So this was basically that hidden supply zone that I was looking at, okay? So back to the 5 minute time frame, and let's see how much risk to reward that this would have provided us. So on the just from the 5 minutes, you would have made something decent, like 22, right? 22R, and that's beautiful. And if you're looking forward to take it to the upside based on, let's say 4-hour, because the last H1 point has also been taken, you could have had something like 40 to 50, yeah, like 45 pips, sorry, 45R, right? And this is solid, okay? So always make sure you're looking for trades within the right areas. When you have had your higher time frames aligning with your intraday time frames, and when you've had a bigger time frame break of structure, and you're looking forward to enjoy the retracement, you're looking forward for a retracement, you can wait for the intraday time frames to tell you so, just like it did here in this scenario for me. Okay, so this is where I'm going to end today's video. If you found value in this video, give this video a thumbs up and leave a comment in the comment section. Tell me what you want me to cover in my next videos, right? And make sure that you subscribe to the channel if you are not subscribed to it already. So see you in the next video.